Hello, everyone. Good morning, guys, and welcome to this Thursday's webinar. How are you guys doing today? Let's wait. Let's wait a couple of seconds for some people to join us to make sure that the sound and the video is fine. So. Good morning, Maria Julia. Thanks for joining us. Ready to roll. Awesome. Tosin Daniel said good morning. Good morning, Tosin. And thanks for joining us. So, and of course, for our friends, they are watching us from other platforms like Trading Life and others. So, you guys are very welcome. Now, let's start with okay, we have the pound in front of us, so why not start with the pound? That's fine. Now, pound against the US dollar, that's the daily chart and the price. Let me just hide a little bit the indicators. Up. Hide drawings. So, the price, guys, created a higher high and a higher low. I explained in previous webinars why we consider this as a higher high and a higher low. Okay, the recordings are there. You can refer back to the webinars. Now, we are still looking for long. Many traders, unfortunately, they're going to start looking for, I say unfortunately because they want to, they believe that they lost the move to the upside, and this is something that the traders they do all the time. They feel that this move is over, but that's the beginning of the move, to be honest. So they are rushing to sell somewhere here. Now, it's nothing wrong to sell here, but you have to understand that the probabilities, how the probabilities will favor you. Okay, now if we go to the lower time frames, it's worth going to the lower time frames, like the 15-minute chart. I sent one analysis to a firm today, and I was referring to some short-term analysis as well, because that's what I provide. And yeah, among with the daily chart, we have, let's say on the 15-minute chart, we have this downward channel. As you can see, we call trend line the upper line of the channel, and we call return line the bottom, the lower line of the channel. Then we have this bullish Marubozu, and the middle of the bullish Marubozu hides significant amount of volume. Now, something else you can guys do, you can draw a channel within a channel. So we have this high and we have this lower high, and then based on this one, there is a very accuracy, expectancy from the price trading within this channel. Okay, and this is started late New York session yesterday. So this morning, the Asian session respected the return line of the inside channel, and we might gonna see some short setup, short selling pressure joining the market from this point here. You can mark it in your chart, okay, and high probabilities maybe to see the price, if it's going to continue moving lower, to see it coming somewhere here. All right, that's a good let's measure. That's a good about 25 to 30 pips, so we can make that amount of money. Why not? Hello guys, Sibley, Tiffany, McPherson. Yes, that will be a long day ahead, so I delete that inside channel, but I show you guys how can you do your trading as well. So fair in the short term, fairly bearish. Let me just delete this stuff. In the short term, fairly bearish on the pound against the US dollar, but depends on the time frame you're trading. If you're looking on the daily chart, the daily is up. But if you're looking to trade on the 15-minute chart, you're going to get with the swings of the waves of the 15-minute chart. Okay. GF asked, how is my day? Yeah, it's going pretty well. Bo said, great start. Share more, please. Okay, Olga said, that's a very good pips, brother. Correct. Doug said, we are kicking off very early and very nicely. Labert, the session is becoming the one I always look forward. Thank you. Ellen asked, so do you mean not to trade the 15-minute time frame? No, absolutely. You can trade any time frame that makes sense to you, and you can resonate with the pace. You can trade it. Okay. EU said new knowledge. Edison, it is a great day today, sir. Thank you, Edison. So next one, let's check the euro against the US dollar. Guys, remember I marked this resistance some time ago, and we said that price might experience some pullback from that resistance, but there is also a high chance, because the market now it's in an uptrend, and it's a strong uptrend for Elliott wave theory traders. Maybe they're going to take this as the longest, let's say, impulse, and then they're going to give it one more shot. Okay, so maybe we're going to see a strong breakout above this area. So for price action traders on the daily chart, here it's a good opportunity. We can go with a buy stop order here, a stop loss below the low of the current day, so a buy stop there, stop loss below there, and we can target just below the next resistance. Okay, we don't want to go right at the resistance, because we don't know if the price is going to make it there. Maybe from here they're going to be some sales off, but this is a decent reward to risk. And again, one of the rules you need to have in trading is the reward to risk. I see many traders, they spot opportunities, they spot, for example, this one here, this price action here. Maybe the room of opportunity is from here, okay, right up there, the recent swing. But if the risk reward is not favorable, like if the risk reward was, let's say, only one-on-one, or you risk 1 to make 0.84, that's a negative reward to risk. That's how we call it in technical analysis. So, and that's how I call it in technical analysis. So I wouldn't take that trade. Now, you must include another indication in your checklist when you're about to execute trade. Do I have a risk to reward that it's at least 1-to-1? I never go for 1-to-1, guys. I go, if I'm going to go for if I'm going to go for something less than 2-to-1, I will go minimum for 1.5, for 1-to-1.5. I risk 1 to make 1.5, or I want to get reward 1.5 by risking 1%. Okay, so keep that in mind. Australian dollar against the US dollar, price at resistance. Now, understand that this market, it's not in a trend. Okay, so it's in a consolidation ranging. Now, when I used to live in Australia, I used to take these trades, but now living in Europe, due to the time barrier, I'm not awake when the Asian session kicks in to take the trade. Otherwise, I would have taken this trade, entered there with a stop loss above here, about 34 pips, and target somewhere the middle of the bullish Marabozu candle. Okay, guys, you can Antonia asked, well, buy stop, why now use buy limit? I barely use buy limit orders. pretty much never use limit orders because I trade price action, and if price action is there, I'm going to trade a limit order in a trending market where there are strong indications from oscillators and some price action that the market is, it's trending, but not under any other conditions. Okay. So for today, if I was about to trade the Australian dollar, let's say on the lower time frame, I will be looking for shorts mainly. And here it's the 15-minute candle. It's about to complete in the next 4 minutes. Here it's a 15-minute zone. That's a 15-minute zone. If we're going to end up with a bearish engulfing here, we might see we can go maybe for 10 pips to make 16 pips. It's fairly good reward to risk. I'm not saying that I will take this trade, but I'm saying that based on the analysis here, there is a high probability of this trade. If it works or not, it's not up to me. Next one on the list is the New Zealand against the US dollar. So another pair in consolidation, another pair that it just moves sideways. It's a pretty much well-defined range, we can say. So if we will have entered short again yesterday, early this morning from here with a stop loss about 40 pips, then we could have gone easily to 80 pips until the price will reach the middle of this Morobozu candle. So on the lower time frame, again, pretty bearish on this one. But you guys need to understand that there is similar behavior most of the times, not all the time, but most of the times there is a similar behavior between the Kiwi and the Australian dollar. So if you trade the Australian dollar and you trade, the Kiwi, if you overall risk, let's say 1% of your account, anytime you trade, you better split the risk, right? Or if it is 2%, again, you split the risk. So far, is everyone following up? Guys, there are so many questions. Thank you so much. But unfortunately, I'm looking on the charts more. Let me just see. Someone says I also go for 1 to 1.5 only, nothing less. Yep, that's great. Perkins said my focus is always 1, 2, 3. Awesome. Jack asked if you would have entered that trade. I assume you're talking about the Australian dollar, US dollar. Yes. How would you have? If I will have entered, are you talking about the Australian dollar? I will have always, I wait for the price action to be completed, and then I add the filter of the Bollinger Band, and the Bollinger Band shows that the price now it reached the top of the band, which is great for me. Price action agrees. So on my checklist, I have the Bollinger Bands to the bands to be touched by the price. Then I want to see the bearish engulfing based on the terms I give on a bearish engulfing. I don't use the bearish engulfing in Forex trading like it's on the net and you find it on YouTube or on a good friend Steve Nison's candles, Japanese techniques with candlesticks, because they are referring more in stock trading. So we need to readjust a little bit the parameters for Forex because of the volatility. So if I was about to take this trade, that's how I would have entered the market. Again, without saying take the trade or not. I'm not here to give any financial advice or any recommendation. So if you decide to enter or any trade, it's purely on your terms, right, and on your responsibility. But yeah, here at MarketMinds Mastery, the way we teach about entering trades is simply we wait for price to come at an area of resistance. If we want to go short, we want to see the price action reject the upper band, and we want to see the price action. We teach the two strong price action. One of them is bearish engulfing, and usually we go, depend on if it's a London session or it's a New York session, depends on the volatility. We go anywhere between 10 to 15 pips on the Australian dollar, and or 15 to 20 on the pound, because each currency pair has different volatility by their nature, and it's something you need to learn in Forex. That all this stuff I will include them on my course. I already teach them during the one-on-one private mentorship, and if you guys are interested, you can reach out to me. You can see the social media, it's everywhere, so please feel free to contact me if you need to correct your trading or to advance your trading. So let's move on. USD Canadian dollar. That's a bit interest, but again, it's a bit of a battle here. Now, let's check how much. Toby asked, how much is your course, please? I haven't completed the course, so I don't have a price tag yet, but I will definitely let you know, guys. Sure, it's not going to be a course that you find there for thousands. I mean, I want you to get value out of that, and I'm sure you're going to appreciate it. So yeah, each pair moves differently. That's right. Yes, absolutely, Hunter. Of course, that's your Timothy. What is the changes you made with the Bollinger Band, sir? I just use the standard deviation of 2, and I use the settings that they come on TradingView, whichever are the settings. Okay, I don't change any settings. Duncan said, this is the right time for me to start planning on how to advance my trading. Absolutely. Yerkes asked, so what is your plan on gold? We will check gold as well. We'll check gold in a while. So USD Canadian dollar. Now, why this is very tempting trading setup, but why I won't take this setup? Because price started from there, made a solid high. Okay, so we have this low, that's the low, and that's the high. Then price made a higher high here, and it made this impulse move, right? So immediately this becomes the low because price made a higher high here. And if we, let's say, it depends on which swings you are look at the market. Even if you look, sorry, I think that's the most recent one. So that's the swing, that's the low, the new low, that's the lower high then, and that's the higher high. So if that's the lower high and that's the higher high, then this becomes the support, this becomes the resistance. Now, price retests the support as expected, but it was unable for the price to retest the resistance. Therefore, it makes this nice trending market a non-trending market. So does this mean that this upward trend turned to a downward trend, turned to a downtrend? No, because we don't have a series of at least lower high and a lower low. Therefore, we don't treat it as a downtrend, but do we treat it as an uptrend? Again, the answer based on trend analysis is no. Why? Because the market didn't sustain the upward move at this point here, at this high. And that's what we call a failure swing high in trading. Again, I include this on my course. So a failure swing high is when the market during an uptrend is not able to sustain the upward momentum, and it fails to create a new swing high. But that's the dilemma for trader. If it fails to create a new swing high, does it mean it's going to create a swing low and we're going to start looking for shorts? No. Why? Because maybe here the buyers, they're gonna come and they're gonna push the price. Price is gonna create, it's gonna trade between a symmetrical triangle, and it's gonna break to the upside. There are many scenarios they can there are many scenarios around this type of market condition. Okay, so we have to understand that at this point here, we recognize the swing high, the failure swing high. And if we wanted to take some short trades, we would have done it at that point. But we have to understand that after this strong bearish candle, the price didn't follow through. Maybe there is a low probability for the price to continue moving lower. Okay, so keep an eye on, keep in mind that if you are rushed to, if you want to buy, then absolutely you can try it. I'm not saying that I know what's going to happen in the market. I'm just saying that based on the technical analysis fundamentals, this move now it has few different scenarios, and it's not a high probability setup to risk our money. That's what I'm saying. Again, I'm not saying it's maybe, I'm not saying what's going to happen and I know for sure what's going to happen. Okay. So next one on the list, the USD price came at the bottom of the band as well as at support, as I drew that from last week. And most likely we're going to see some push to the upside because the support yesterday failed to be broken. So imagine that buyers maybe want to come and join forces, and yeah, that will be a good setup. Let's see the long position. If we're going to buy at the breakout of the previous candle high with a stop loss below the previous candle low, and this is an inside resistance. Okay, again, something that I teach on my course. What is an inside resistance and support and how to trade it? The risk reward in this case is 1-to-1. Now for me, it's not a favorable reward to risk, therefore I'm not interested in this trade, although it can be a good trade. Okay, but it depends what is your plan, what you are after every time you trading. Okay. Maria said, yep, it can totally flat out and fall. Yep. And fake push up and then down. Yes, that's correct. I assume you talking about this one. And guys, as price already made a new high, the today's high is higher than the yesterday's high. If the sellers, they will come aggressive, they gonna take the previous yeah, that's for a short setup. They're gonna take the previous candle's low, previous day's low. So in this case, if we talk about a good trade, that's until the support, we have more than 1.5-to-1 reward to risk, and that will be a great trade to take. Okay, simple as that. Now, and the pips here for this trade, it's about 58. If we plot the average true range to find out the average range of this pair, it's about 77 pips. So there is a high chance that the market, it's gonna move within 2 days to the target. And that's another thing you need to learn, and I can teach you about how to understand how to enter and which price actions to validate based not only on their shape and meaning, but also on their size. Next one, USD/JPY. We had the upward channel draw from a few days ago. Price didn't touch at the channel. As you see, the last time price moved to the upside, it respected the 20-period moving average of the Bollinger Band without interacting with the channel. And this time, again, it behaved the same. Now, I'm not interested about that because it's not a pattern that I usually trade. I don't trade ascending triangles. Like this one can be an ascending triangle within this long uptrend. If you guys zoom out a little bit, you can see price makes extreme highs, and since here the indicator, it's unable to create even a higher than any on the previous high. So when price was at 145, the RSI was at 75. When the price went from 145 to 146 to 147, 148, 149, 150, 151, the indicator was going from 76 to 75 to 74 to 69 to 68, 67, 62, and now it's at 57. So low probability trade. It's not something I'm willing to take a shot on that. For some short-term activity, yes, so the indicator is moving lower. Hard ask, are you expecting to make a correction? If you're talking about the pound, the USD JPY, then I believe it's going to move higher. Yeah, I'm expecting to, on the USD JPY, to be honest, actually I don't expect anything. If I see a reversal price action at resistance, I will take a short sale. But if I see a breakout, I don't expect anything. I mean, the recognized pattern was, the pattern we could recognize and trade was at resistance. Now, if the price breaks to the upside, then we're going to revise our trading plan. We're going to see if it broke with a strong momentum, if the indicator is going to register a new high, because if the indicator is going to register a new higher high, it means that the price broke with a strong momentum to the upside. We're going to see we're going to measure then the body of the candle, and we're going to check it out. So we're going to take it, we're going to take a different approach. So maybe we're going to be ready to buy once price correct afterwards. Next one, Euro JPY. It's still walking the bands. That's how we call it. And yeah, I'm not interested to buy anything here. Okay, so I'll be waiting to see some retracement. Maybe price comes somewhere there, and then look for buying. There is also, yep, that upward trend line, it looks good here because the it's about pretty much about 45 degrees, so I'm happy with that. Let's name it on the chart. That's the upward trend line. That's a T1. We keep an eye on that. So any questions? Many questions. Someone says, appreciate your analysis. Thank you. What about dollar index? We're going to check the dollar index. Yes. Template said, I will expect some from the correction for the price. Yes. Joseph said, asked, seems most pairs are still developing. Yes, you are correct. Absolutely right. Anna said, I think the price should have peaked by now, right? That's correct. Yep. So let's check the dollar index. Now, with the dollar index, the price broke outside of the lower band, and I have this inside resistance drawn on my chart now. That was a previous support. That's going to turn to resistance. Let's see if the price is going to move higher. I do expect definitely the price to move higher. That's why I was willing to sell these two pairs this morning, but I wasn't around. The Australian dollar, US dollar, and the New Zealand US dollar, but not the Euro Aussie, neither the pound. Sorry, not the Euro Aussie, neither the pound, the Euro US dollar, neither the pound US dollar. Okay, why? Because the Euro US dollar, it's in an uptrend. The pound US dollar, it's in an uptrend. If I sell this, there is the when a pair it's trending upward, guys, it means there is imbalance between buying and selling pressure. Okay, buyers are stronger than sellers. So if there is an imbalance between buying and selling pressure and the buyers are dominating the market, we don't know if this is going to sold off. Maybe it's going to sold off, but we don't know. But for example, the Australian dollar and the Kiwi US dollar, they are within a trading range and price touched at the top of the trading range. So there is a high probability that the market is gonna create a move to the downside. So it's easier. It's just as explanatory itself. It's a high probability for the market to move lower. That's it. Simple as that. Okay. Gold. With the gold, it's a bit of a thing here. Now, price stopped at the 20-period moving average. If you go on the lower time frames, you're gonna see this as a small head and shoulder pattern. You see here, that's the neckline, that's the left shoulder, right head, and then right shoulder. Price broke below, it's retesting somewhere here. Yes, and yeah, there is expectancy for the market to move lower in this particular case. Now, if you're gonna trade on a 15-minute time frame, you understand that the market is in an uptrend now, so you need to wait for some kind of either negative divergence or some kind of lower highs and lower lows or double top to trade short. I mean, if price has a bullish momentum, you don't want to try and take the short positions here. Okay, guys. German 40 on the daily chart. Price makes higher highs and higher lows. That's definitely bullish. On the 4-hour chart, the same. On the 1-hour chart, yesterday the price made this higher high, and since then is trading with this. Guys, this is a rising wedge, and a rising wedge, it's a bearish pattern which when found in a strong uptrend. Okay, so it takes a bit of time for this pattern to complete it, but yeah, it has mainly bearish implications. The only way that we're gonna look for no, actually only from that point. No, that's not a rising wedge unless we take it from there, which it looks more than an ascending triangle. No, so we keep our bias bullish on the lower time frame as well on the German 40 if you would like to participate in trading activity there. What about Euro Oz? Double top here, consolidation. Price came until the middle. Who knows what's going to happen? Same with Australia, with the Euro, New Zealand. Bearish engulfing, double top, but price didn't move. Guys, any other currency pair you would like to see analysis? I think we covered all the majors and some others. Someone asked, any recommended books, sir? Definitely many books. I mean, depends where you want to where you want to put your attention to, where you want to focus on. If you want to focus on price action, to learn price action, definitely there is uh, Japanese Candlestick, for example, that book from my friend Steve Neeson. It's fantastic. If you want to learn, um, let's say, the overall technical analysis, there is a book about 1,000 pages. I have it, and it's a brilliant book. If you want to learn about psychology, then you refer to Mark Douglas' book, Trading the Zone. Um, or if you want to be more familiar with um, time frame analysis, you jump from a higher time frame to lower time frame to the other time frame. It's mentioned nicely on Dr. Alexander Elder's book, and also he explains pretty well how to what happened at the support and resistance zones interaction and so on. All right, guys. Yep. Someone asked, what about books for trading psychology, Brooke? I believe for me the top book it's Mark Douglas, Trading in the Zone, and oh my God, which one is the other one? I have both. I read both. I forget the other name. Can we check, do analysis on USDJPY? Ray, we did it before. Please, once we end the live, you can refer back to the video. You can find it. Nancy asks, can you do Euro Pound? Yep, I can do that. It's Euro Great British Pound. Euro Great British Pound. It's a bit choppy here. You see, guys, how there is a lot of wicks on this pair. The price action is never solid. Even within this downtrend, the bodies are very small. Rarely we get good moves on the Euro Pound. Honestly, most of the time it's just moving sideways. You see this. The trends are not even well definable. So, yep. So that's an uptrend. Here it's a resistance. So price it's right at the previous swing, but with a rising troughs. So we expect to break outside of the resistance. Now it doesn't mean price is going to break outside, but yeah, we expect it to break outside. Some negative news on the on the UK. They force the pound to get weaker. Some neutral news on the euro. They sustain euro's strength. So yeah, I'm not surprised to see this pair to break to the upside. Yep, absolutely. Mainly bullish than bearish on the pound, unless a strong reversal price action occur at this point here at the top. Research, we have seen good fundamentals on the euro. Yep. Samson asks, so it will keep climbing higher? Yeah, maybe. Why not? I don't see a reason why not. Based on the technicals and the fundamentals, it can climb a bit higher. If you are bullish on this one, guys, please be mindful that this resistance is the next area that we're going to be looking for. Okay, guys, I think that's all from me today. I would like to thank everyone for your participation on this live. I see you found them valuable. Here at MarketMinds Mastery, we try to do our best to give you all the valuable information. And yeah, I really appreciate you guys, and of course, all of you guys who are watching us from different platforms. Thank you so much for your support. Oh my God, guys, there are so many currency pairs you are asking me to do. But okay, we're gonna do everything more tomorrow. Okay, we talked about the euro os that it's just in this range here, so we don't have a strong bias on this one. After the price didn't follow to the downside on the euro, New Zealand the same. On the Canadian dollar JPY, the price is at the upper band. There is still room for the price to move higher. Okay, so yeah, that can be a good. It was an inside candle yesterday, a breakout occurred, and the price rise to the upside. Yep. So for the for the CAD JPY, I see that more bullishness can come, although we are just closed outside of the upper band. But again, maybe some volatility. It's gonna force the price to push higher. Overall, is bullish. All right, guys. Finally, I will let you, and I wish you to have a fantastic day ahead. Enjoy your trading or enjoy your day if you're going outside. And please, from us here at Market Minds Mastery, we would like to again say thank you. Please make sure you follow us on the trading view. Here it's the Market Minds Mastery on trading view. You can see on the frame. And also, if you go on the profile, on my profile, you can see all the links. Please make sure you follow us on the YouTube, on TradingView. Join the Telegram. Feel free to join the Telegram. Absolutely. And yep, I will be looking forward to see you tomorrow for another live market analysis. Thank you, everyone, and have a great day. Bye, guys.